What is up, everybody? Happy Sunday. Happy Super Bowl Sunday for those who celebrate. How are we all doing? Welcome to Mark Kickoff. This is going to be a slightly, I say slightly because I guess it depends on the engagement too. I don't know how many people are going to be hanging out. I would imagine we're going to get a lot more watching this back tomorrow morning after the game, whatever time frame you guys are operating in. But this is basically like Christmas for those of us in the United States who are fans of the NFL. This is when people that don't watch sports. So I will do my best. I mean, my plan 100% is to get everybody out of here before we are even, close to kicking off. If you are hanging out with me, thanks for showing up. Thanks for being here. I really appreciate it. I didn't want to leave you guys hanging. I didn't want to, do this as a recording, or I honestly didn't think anybody would want to even fill in for me potentially. But that's the good news of me having a newborn is I'm not going to a Super Bowl party. So I am here. I'm going to be enjoying the game like everybody else with my wife and my baby and just kind of hanging out. So before we really jump into things, who's everyone got? I guess that's the first question is, are we Team Eagles? Are we Team Chiefs? What is everyone thinking here? What is going on with my camera? That's weird. What is everyone's prediction? I'm Team Go Birds. I'm Team Happy Birthday Saquon Barkley. So let's hope. Yeah, Coach Dakota with the zebras. That's no. Let's hope it's not that type of game, sir. And the zebra crew leaves everything alone and lets the game kind of work itself out. Team refs, yeah, you guys are funny. Let's hope it's a good game. Let's hope it doesn't come down to, a pass interference call on the final drive or something ticky-tacky like that. Let's hope everyone is on their best behavior here. So, looking back at last week, how did we all do? Did everyone have a good week? I know this was, there were moments of volatility. We obviously gapped down last Sunday. And I guess the big question on everybody's mind is, are we going to do it again? If you were paying attention to Twitter in the last 30 minutes, it looks like our president has once again said the T word and is announcing tariffs on, I think it was U.S. steel and something else of 25%. So volatility is here to stay. I would imagine this is not going to be the quietest Globex that we would usually see on a Sunday open on Super Bowl Sunday. So yeah, I'm curious to see, do we gap down again? It looks like excuse me, all things are pointing to that. I don't know how violent it will be. I think the market may be in a wait and see mode because he was going to announce additional tariffs on more countries coming in the early parts of this week. So yeah, we may gap down. But then we kind of have to see. You got to kind of also be aware of the pattern that we've been in where we, gap down, you had a violent flush, and then we spend the whole week just kind of drifting upwards until there's another tariff tweet like Friday, which sends us back down the rabbit hole. So looking back at this week, I mean, there's not a lot to say outside of, we basically remained in balance. And if you guys were paying attention last Sunday, an area I was talking about on Yes to look for sellers to come in and reoffer was going to be anywhere between the 6,100, 6,110s all the way up to basically what was SPX 6,100 on the big options the big options strike, was going to act as a resistance going into this week. And we kind of, towards the Thursdays and Fridays, we were hanging up at that area and just could not seem to break through. We started to drift up there and basically pinged that option wall on SPX. And then shortly thereafter, the tweet storm started and we fell down and really couldn't pick ourselves back up. So what does that tell me? Well, it tells me we're basically just in the center of a giant balance range that I think, once again, we were talking about last Sunday. And it's the same thing on the NASDAQ too, that we'll jump in and talk about a little bit deeper, but we're in the dead center of this balance. So going into this week and seeing us close at last week's point of control as well, I don't really have much of an edge. I think it's going to very much depend on, do we gap down? And then, what is the market just kind of waiting for, what comes out of Trump's Twitter fingers to give us some guidance on where we may go from here. This is another time though, where we kind of went to try to peak again to get back up into the pre-FOMC range and rejected once again. So I am taking that seriously going forward until we get more clarity on the tariff thing, or the market shows us that it doesn't care anymore, or that things are going to be positive. This is the third time, like I said, in 3 weeks that we kind of came up to this area to get back above the December pre-FOMC meeting and failed once again. So from here, if this selling continues out of a gap down or anything from the tariff news tomorrow, I would expect us at the very least to rotate down to the bottom edge of that value and last week's range to kind of go retest the 5950s. I think it's very reasonable to say if there is any downside, that's the first place you could expect somebody to step in and try to continue to stick save this. Is going to be down in this area. As I said, going back from that FOMC candle, if you look at it on the 4 hour, I mean, we're basically still inside it, and we have not really been able to get away from that range. So for the time being, my guidance, my advice would be to play around with that, to basically, look to play the very wide range that is about 200 points of that candle. So looking to, take longs down here in the lower 5900s, and you'd be fading it up here again towards the kind of, 110s to 120 spot, just like we had talked about last week. It makes a lot of sense, and until the market gets new information, or they shakes off the tariff news, or decides it wants to kind of reprice equities a little bit based on, all of this new jargon that's coming out of the president's mouth, that's kind of the play. That's the only way I see this. Otherwise, you're just going to get beaten up in the middle of this range, waiting for a tweet or waiting for positive news, and definitely should be with that momentum, but for me personally, outside of like intraday scalps, like I am very careful about this range, just knowing anytime a tweet could come that could send us up or send us down, like you saw on Friday. If you weren't using stops on Friday and you were not short, you had a very bad time. I think Dakota was on Fast Markets, and Dakota, I think you showed the tick chart that had a massive gap that I think you even said like, this is what slippage looks like, or something to that basically there was just a big gap in the tape. And that is how you get just absolutely blown past even a max loss limit. So be very careful, guys. Use stops, be patient, and, try to, like we've been saying for the last few weeks since this chaos has kind of started, you really need to be in a see profit, take profit mode, where if things start moving in your favor, there's nothing wrong with, holding a runner or anything like that, but you should be getting in and out of this market just out of that fear. Unless we're very much in a consolidation, kind of wait and see, waiting for more information, but that's exactly what the market's doing, is just waiting for one of those tweets or something for it to move out of like that type of consolidation we were in most of Wednesday and all of Thursday. So just be careful out there. I'm putting my weekly pivot on ES a little bit further down, back towards the previous week's value area low. And this would equate to roughly 6,000 on SPX. So that other options chain that I'm or options wall that I'm looking at back down there. And something's going on with my gamma data. I don't know what was happening on Friday. I couldn't get a good clean snapshot of it. It made no sense. So something was wrong with the data towards Friday's close. So I apologize. We won't be talking about the options chain really much as far as the gamma positioning going into the start of this week. But just know that's the big strike. And then 6,100 is probably another big strike. And I would not be shocked with this Friday if we saw positioning with CPI and things even this week, that you would have seen a larger negative exposure down here towards the 5920s, the 17s, to basically equate for that 5,900 strike as well. So that's what I would expect to see on there. I would imagine Friday kind of streamlined a little bit of some put selling and put buying. So I would imagine there's more exposure now towards the downside, but I just can't show it to you. I'll check tomorrow and I'll be sure I'm active to distribute some of that information too, so that you guys have it. But yeah, we can't talk about it tonight because the data's not there. Yeah, so as far as where we may go, if we were to lose that 6,000, I think it is very reasonable to say last week's lows make a lot of sense. But now I'm sitting here with there's another kind of shakeout of this tariff news, a lower high. Do we once again kind of go test the election lows down here? I mean, that would be a pretty wild move for the week. Maybe not this week, but it's something that I just continue to want to remind you guys that this is that kind of election night lows down here toward 5,800s. I would love to see us pierce below before, basically that's what I wanted to do down here, but we didn't make that kind of excess low outside of that election night area, and then you could have bought it. It just was a little premature for me trying to do the exact same, dip buy there in the pre-market, going back to I can't remember what this one was. But anyway, that is the area. If we were to lose that kind of 5,900, 5,920 spot, that I would imagine we go take out. But that would take a rather violent week and most likely a lot of tariffs and a lot of other things to kind of reprice some of the equities. But an area that you should still have kind of marked on your chart. But for the FOMC candle as a whole and kind of looking at this range, that basically takes us down to that 5,900 strike on SPX. So as far as the range for this week, I think that is a decent spot to test for some longs, knowing if we lose that FOMC candle area, we're probably going to go break those lows at 5,800. So from there, once again, to the upside, if we got positive news or anything to kind of start drifting back up towards last week's highs, I am still personally looking to take stabs selling this, just knowing unless there's new information that's causing this move up. And in that case, if we do finally break above kind of the 6120s, I would expect us to go up towards 6,200 and go make a new all-time high. But I'm not seeing anything from buyers here that shows that they want to go buy the all-time high in that area. So I'm continuing to look for sellers to kind of be present in this general area and re-offer in those spots, just like they did on Friday, like almost to the tick on 6,100 on SPX that we sold off from. At least started it, and then a tweet sent us down the elevator shaft. So we'll have to see as we come into the Globex Open here in 15 minutes. We'll get a peek on, are we going to gap down again? I don't know if anyone's been watching or sees anything on the tape so far that's giving us more guidance, but the 25% tariffs on steel and aluminum, I would imagine that's going to cause at least some aspect of a gap down for the time being. On the NASDAQ, let's jump over to NQ. So looking at NQ, we basically closed right around the point of control once again, just like we did last week. And if you guys remember, this 5,500 spot is a spot I've been talking about. Excuse me, 5,500, 550s spot we've been talking about for the last few weeks. And no surprise, if you look at it on the longer time frame with all of this volume, it basically is the point of control area. It has acted as kind of a pivot to the long side or the short side for this larger value area that we've been in for weeks and weeks and weeks. So us being in the dead center, I'm not too confident with either direction, to be honest. You really want to see volume start to build and us get back over kind of the 620s, 630s before you'd feel really safe wanting to long this. But But if we do start selling and we break below this kind of 550s area, the logic would be we rotate all the way back down towards the 400s. And a more likely case would be, if that is real weakness, we will come all the way down and traverse this entire value range back down here towards the 21,000 kind of 150s to 200s. That is pretty reasonable, to be honest. If you get any weakness, you would expect us to kind of move through this entire value area, especially if these lower 400s don't offer any sort of support. They did a few weeks ago with all of this volume that traded there, but if it's, you know, just like we've said for the last few Sundays, like if this is news driven, we likely are just going to kind of drift down towards a larger area where buyers would actually want to come in and buy this, which would be back down towards the 21,000s. So I'd be looking to potentially start taking some stabs long, you know, once we get some volume build in this area. I'm not going to be the first person to knife catch this down here, but we establish some kind of basing in this area. I think you have a decent safe long there. Once again, unless we just start knifing through this, and we then would be looking. Once again, you guys should still have this, I would hope, marked on your charts, but the low area down here towards the 20,400s to the 20,300s, that election low, once again, is an area I still have marked on my chart that I would love to see taken out and then us come back up. That would be a very nice kind of move off of the all-time highs that I think everybody would be trying to buy and wanting to buy, and actually is a decent safe opportunity, even in longer term holdings, just to start continuing to buy things if you really did get that retest back down there and it held. So for this week, like I said, if there is a gap down, I would expect that rotation down here towards the 22,200s to start looking for buyers to show up and defend that area. Until there's new information, we very much could continue what we've been doing the last few weeks, which is just balancing in this range. And since all of the DeepSeek news and then the tariff news haven't stopped people from buying in the 21,000 area, I would expect that to continue. I don't think another tariff tweet's going to be the thing that sends us all the way down, but we'll see. If he starts announcing tariffs on every country in the EU, then who knows where we go from here. So that's kind of how I'm reading this to the upside. Once again, if we do start drifting higher, you got to get through the big aching number that is the 21,800s. We just continue to struggle in the kind of 8 to 900 spot. And obviously 22,000s we couldn't even get to last Friday when we started just moonshotting out of the gate on the NASDAQ. So once again, even if we do come up here, I am very weary of initiating longs in this kind of 800s to 850 spot. I'd much rather be looking for buyers to continue to push us up to go retest these 22,000s once again. But I am very weary at longing this again up here, just knowing how many times this area has just been rejected, since the FOMC. But much like ES, we are still inside that FOMC candle. So it's tough to make too much of it until we kind of get new information and push out of this balance range. And once we do, you shouldn't fade it. You shouldn't be the first person to fade it. You should be going with the move. We talk about this on a lot of different, trading instruments. So that would be the logic. If we do finally get positive news and we start drifting up and we push through 22,000, then yeah, you should be long and we're going to go make a new all-time high. If it's to the downside, like I said, election lows down towards the 22,400s. That's where I'd be expecting it. So until then, guys, fade the edges. That's the wider range play. And if you're in the middle, it's very much got to be what's going on in the session in the shorter time frame, the price action telling us, what is Delta telling us, what is volume telling us. It's just it's tough to make any sort of decision in between kind of this 700s to the 500s area. It's just a lot of volume, a lot of chop, and a lot of indecision from the market. So, like I said, there's no problem with trading in this area intraday. You just got to be very scalpy and see profit, take profit as you kind of are moving with momentum and based on your market generated information from the previous session, from the current session to kind of guide decision making. I just don't love Trading the NASDAQ when it's got this much volume and it's that like a 200-point range, to be honest. So just a tough spot where we're going to open. We'll see if we actually do open there. Very much could be a gap down. We'll see. Nick, are you trading ES more than NQ? Just because I'm on this, I see this question. Yes. So basically, since Trump has taken office, I pretty much have been trading ES. It's just more to do with the volatility that we're seeing, and ES just respecting levels a little bit more than the NASDAQ tends to. So I have just been a little more successful, and it's just something I've been trying to get back to when things are a little crazy. I rather not. You guys have seen, like, you take stupid stop outs on the NASDAQ sometimes, and even it may still respect a level. Just like this, like we just kind of wicked up towards 970s, but there was nothing wrong. Like you could have tried to short like the 930s for this, value area high in theory. But we just went up and took out the old high from the previous week. So it's like these little things like that just drive me nuts versus yes, I basically could have shorted, 120s like I was talking about last Sunday, and it barely moved against my entry versus I could have shorted 950s, 960s and probably gotten stopped out still. So that's kind of why I've just been leaning more trading ES, just because it tends to be a little more respectful towards MGI and, other information that sits there. So to each their own. If you're still going to trade the NASDAQ, I always recommend sizing down during times like this. But I've been trying to give the guidance. If you are a NASDAQ trader and you've been having having a few tough weeks, maybe trade minis on ES instead of the NASDAQ. Like just try it for a few sessions, see if you just do a little better. Still don't change a whole lot about your strategy in theory, because they do tend to trade in correlation a lot of the time. So it just may save you a stop out or two here and there. Andrew says currently estimating NQ gap down of about 120 points. I really hope not, because this is back-to-back Fridays when, Nick with some options decides to short up here and then covers, because you get a good move down. And I'm not an idiot. And then we get a massive gap down, and then I'm sad on Monday mornings because I could have had a lot more money in theory. But whatever. That's why you just got to be strategic. Options are so stupid at times. It's just who's banking on a gap down on Sunday? Nobody. It's just so hard to want to hold short exposure over the weekend, even in the Trump markets. It's just so risky. You just never know. But I mean, have we ever had 3 Sundays in a row with gap downs? I don't even think we did that during COVID. So that would be pretty wild to see, even though we just continue to drift up and we basically have not moved in the last 3 weeks of 3 gap downs in theory. But I guess we'll find out here in about 7 minutes. So let's jump over, before we get to the open, let's jump over to Crude. Crude continuing its a drill baby drill meltdown back down to the area we were talking about last Sunday, which is the top of the old balance range. And this basically the top. It's a little bit further down if you really want to base it off volume. But we are now kind of potentially, like, we retested the highs of the old balance range coming down here towards kind of the low 70s, the mid 70s. Do we start basing here and establish this as a new, whatever you want to call it, just the top of a new area that we're going to be trading in, a new trading range for the most part? It's hard to fight the logic of the new administration of, opening up more pipelines, more or less regulation for natural gas, for crude oil, for everything else that we're going to potentially do in this country. It's a tough narrative to fight, I would say, on the trend for the time being, just because in theory, all that means is more supply hitting the market. But what I'd be watching this week is, do we continue to kind of hold these 50s to 71s to start basing here? And in that case, you could be safe trying to along this at least back up towards 7250s to 73s. And we kind of get that test of, okay, or do we bounce off of here? And then do we establish a new trading range for crude for the time being under this new narrative? That's something I'd be looking for just out of hope, I guess, as a trader, that we don't fall back into this range. And, you know, this breakout just makes me sad then, because it was so fast and then so fast back down. If we do, however, lose this, you'd be expecting a rotation back into the kind of, you know, higher 60s, back here towards 68s. And that would just make me sad. The 68.30s, 68.40s. I really hope it doesn't, guys. I really don't want to see crude back in this range, because we were in this range for months, going back to September, maybe even further. Yeah, September, end of August. So let's hope that our crude traders want to buy this dip and we start to, you know, balance from 70s, maybe even to 74s, and establish a new range there. I'd be taking this. I think just from a technical perspective, I know the narrative and things, but I feel like you kind of want to try it if this continues to base and hold that 70, 50s area at the very least. You know, if you're wrong, because we start drifting back into this range, and then you can kind of wait it out. But in the event that we kind of start pushing back above 71s, I would love the chance to try to long this and hope that crude can make a move back up. But as I said, it's so risky just with the headlines and the logic of more supply going in. So personally, you could try it. But for the most part, it's just a tough trade to fight that logic. And so I'd probably be hands off. But if you saw this start to build above 71s, I mean, there's nothing wrong with an intraday move. If you start to catch that momentum to the upside, to ride with it, just knowing that the 70-50s is the top of that old range. And if we base and hold it, nothing wrong with trying the long, but you have to be, you know, kind of scalpy. And if you start to see weakness come into the market and just follow this and continues to follow this trend back down, in which case, like I said, we will most likely come back into kind of the lower 69s to the 68.50s area. So tough trade. We'll see. Yeah. I'm curious to see, does the narrative push us back into that range, or if it's going to hold for the time being. So we got 3 minutes till probably the Armageddon gap down moment. So let's take a peek at the continued march that is gold towards 3,000. So gold continued to make all-time highs majority of last week, and there's not really a seller in sight on a longer time frame. It seems like everyone is just continuing to kind of buy any dip that happens in GC. So, you know, as far as establishing the trend, do you get a dip back down towards kind of the 2800s to 2850s? I mean, probably. There's a decent amount of volume, but the point of control was up near the almost 2900 from last week. So I'd be patient here, you know, looking for a buy at lower prices, but you have to be on the lookout if we continue to kind of march up. I don't know if we're going to get to 3,000 here this week, next week, or even the next couple of weeks, but I would imagine there is a large sell front running that move at any time. So you just don't want to, I'm just not going to be the first person. Like I don't love initiating longs in GC up here. It's the same thing. I think we've been saying this for the last few weeks, and it continues to prove me wrong by just mooning higher week after week. But this continues to just week by week time frame, you know, point of control near the highs, point of control near the highs, point of control near the highs, and just drifting higher. So look for a dip, maybe even back down towards the 2850s, 2845s to potentially try to get long on the shorter time frame. But I'm just weary at continuing to long it up here. I'm not going to be trying to short this because that's just idiotic at times. But if you're scalping intraday and that's your thing, go for it. But it's tough for me because, you know, all roads, as we say, all roads lead to VWAP. All roads lead to 3,000 at some point in probably Q1 with GC. So I would absolutely love a chance to still get long on this back down here towards the, you know, 2770s, but I don't know if we're going to get it, at least not right now. I would expect that comes in the coming months, like a nice move back down to go retest, you know, the old all-time highs, even back up here towards 2800s, you know, the lows of the last couple of weeks, kind of all this volume sitting up here, but I don't know when we get it. So we'll leave it there. We're going to watch this open. Let's see the chaos. Everyone place your bets. If you didn't already get your prop bets in for the Super Bowl, let's get a prop bet going here. Are we going to gap down? And if we are, how big? Place your bets in the chat. We're going to jump back to ES to watch this shenanigans. Minus 1%, gap down, 300 points down, gap down, and we gap down. Oh, look, right to Nick's weekly pivot. And then there's some immediate buying. There's a 300 lot on the tape at 60.13s on ES. We did not get there. I think the opening print was right around a 60.14. So that guy just missed, or the algos just ran away with from filling that already. But if you bought that dip right out of the gate, yeah, not as violent of a gap down as we've seen. What was the NASDAQs? About 100. Who said 100 and someone said like 120 points. I think we did about 160. If I rough back of the napkin math is correct. So nice little gap down, but already trying to make an attempt to go fill it. It isn't as violent as the last couple weeks. ES is on a tear already, up 20 points since the gap down. So be wary of this. I mean, this could fill real quick and make me very happy, so we don't have to worry about filling the gap all week. I mean, I guess we did that last week too, where we filled it. we had those weird ones. We had the one that took all week to fill, and then we filled the other one by Tuesday's open, or it was Monday night's Globex open. So it's already kind of marching back up towards the previous day's lows. So be careful if you are trading this, but a nice little gap down, but not as crazy, not as violent as we have seen. I don't know if anybody was as close as Andrew. I think Dakota wanted 300 points. Andrew said 150 points. So I'm going to give him the fake medal for being closest to the pin, I guess, without going over. So we'll give it to Andrew with 150 points. I think it was roughly like 170. It's like The Price is Right. All right. So we'll continue to watch this, but I would imagine this gap is not going to be here very long. Just immediate dip buying off of that low. And we bounced right up what was the spread on Friday? Now I'm blanking. I thought it was like 20 points, but maybe it was a little lower than that. Because we came pretty much down to what would be 6,000 on the S&Ps. So SPX. So it's going to be an important level to watch in the early parts of this week. I would imagine it's going to take some real selling to kind of break through this again, and I would take it seriously if it does. That's why the pivot's there. But yeah, I would imagine this gap's going to get filled quickly before we even really get started on the big game here in about 30 minutes. And as always, I'm going to jump to some earnings. Like I said, I don't have my options data to show you guys because something broke on Friday. So we'll look at it later this week. But if you have questions, just because I'm going to, obviously this is going to be a slightly more abbreviated session. You just never know. I know if you're here, awesome. But I would imagine I want to let everybody go get some snacks, crack open a beer, get ready for the big game. I do too. So we're going to definitely finish before 5:30. So if you do have questions, guys, please throw them in the chat. Andrew's going to grab them and I will get to them here in about probably 10 minutes. And we can kind of just wrap it up from there. So please throw them in the chat. We'll get to them and I will answer everybody, as many as I can, I guess, as usual. So we'll keep watching this. So far, still hasn't filled the gap, but it is getting closer and closer. Roughly about 50 points away on the NASDAQ and about 10 away on the ES. So we'll keep watching, but we're going to jump over to some earnings for this week and then we'll get into some data. So we are, with the exception of NVIDIA, pretty much through the chaos earnings that really can move the market, but there are still a number of names this week that can have, are going to have an effect on the equities. The biggest one going to be Supermicro on Tuesday after the close. SMCI is reporting. We do have Robinhood on after the close Wednesday. Coinbase, Twilio, Moderna, Airbnb. So there is a good amount this week, but nothing that's going to move the market the way the Mag 7 does. So Cisco as well, still important to watch. But for the most part, just some larger names, but nothing that's going to cause Armageddon or the crazy bullish post earnings release action that we've seen the last couple of weeks at times. Granted, it was a weird, like violent Amazon earnings, but I felt like futures was so muted and then the dip was bought. So Nancy's favorite, Palo Alto, coming in Thursday after the close. We do have Reddit after the close on Wednesday. Upstart. I still don't know what Upstart does, truth be told, just like that dude on CNBC. I never looked it up and I don't care to. It just makes me laugh thinking about that entire interview. Shopify, another decent name in the e-commerce space for us coming in pre-market on Tuesday. But for the most part, a lot of big names, but no one that's going to cause any sort of chaos. So lighter week. I think NVIDIA is in a couple weeks, maybe 2 weeks. Obviously we do have Coinbase too. Definitely would affect potentially reactions. Always seem to affect the crypto market based on their earnings. But it's been a pretty wild couple weeks in crypto too. And there's more meme coin shenanigans. So here we are again in this cycle. I just laugh and scratch my head. As far as data, we do have a lot of things that will move the market this week. Tomorrow, we do have the consumer inflation expectations at 10 a.m. Central, but the biggest ones are going to be Jay Powell testifying, I believe, in front of Congress. Someone can correct me if it's not actually Congress and if it's a specific committee. But Jay Powell will be testifying on Tuesday as well as Wednesday at 9 a.m. Central. So go us, because not only do we have Jay Powell on Wednesday, but we have him in the fallout of the next CPI reading coming in. That is right. If you have missed it from a few weeks back, it is back again, as well as PPI on Thursday. CPI was kind of, if I jump back to the charts, was this nice little candle right here. That kind of changed the narrative and at least set us into this balance range of these kind of 59.50s holding for the time being. So we'll see. Does inflation still look like it's continuing to cool, even though and did we just fill the gap? No, a little bit more. We'll see if that continuation of that narrative, even though it was like 0.1% for month over month or whatever it was, this off the top of my head, I don't remember. We'll see if that continues. I don't know exactly the full scope of what Jerome Powell, Daddy Powell, is talking about to our lovely elected members, but it will likely move the market regardless. Anytime he speaks, the algos just listen to words he says, terminology he uses, the tone of his voice, the color of his tie, all of that fun stuff. If we need another prop bet, it'll be, does he change the color of his tie between Tuesday's testimony and Wednesday's testimony? So we can start talking about that and placing bets on that. But I would imagine with Coach DBA and I on Fast Markets on Tuesday, that should provide a lot of entertainment for us to, have his testimony going on in the background as we're trying to trade with y'all. So in addition, we do have a few other Fed speakers this week with Bowman and Williams talking as well on Tuesday. So the other big one, we do have Bostic speaking on Wednesday, as well as a 10-year note auction. Rates have come down a touch, even though we haven't obviously had any change in Fed funds futures and things. Slight repricing, I think, of how they're kind of articulating how many cuts and when those cuts are going to happen this year. But for the most part, the 10-year has been holding around that 4.5 level. So always important if you're going to be trading around lunchtime on Wednesday, in addition to all this chaos with CPI and Fed Chairman Powell's testimony, is that we do have that auction, and it definitely can and will at times during it after will move the market, not crazily unless it's just a horrible showing, but we'll have to be careful around that time. Just, I never love trading around the 10-year auctions just because you do get a weird like spasm. So just be prepared. There is a 10-year auction Wednesday lunchtime. On Thursday, as I said, we do have PPI, jobless claims, and I believe, isn't there one more? No, for some reason I thought it was unemployment too, but no, just continuing jobless claims and PPI coming out in the pre-market on Thursday. And then Friday, we do have retail sales to kind of round out the week, and business inventories, which is never a big mover. And then if you trade oil, Baker Hughes at noon, doesn't matter because it never really affects the market as the way it should at times. So big week, a lot of things that are going to shake us up. It's going to be, and then you throw in the tariff man on all this, and you just need to be careful this week. I don't know exactly what could come out of Powell's mouth that'll move the markets, but it really doesn't matter anymore because anything somebody says with their thumbs can move the markets. So it's going to be a chaotic, fun, chaos week that will likely give people some trouble if you're not doing the things that we talk about, which is using stops, sizing down, seeing profit take profit, hitting the lockout button, respecting your stops, and walking away from the day, not snowballing, not going on tilt because you were trading CPI and you got stopped out trying to place a stop limit order or something stupid and idiotic as that data is coming out. So just be careful this week, guys. As I said, if you're an NQ trader and you've been having trouble, maybe this is the week. Maybe you don't switch to micros if you're just not going to do that, but just switch to ES. Try something a little different. It's my advice. This is a week to do that because between the Twitter storm and CPI and Powell, there's a lot of reasons to be careful this week and, trade a little smaller. So we are getting danger close to filling the gap already. I didn't have that on my bingo card, but yeah, I'd rather have it because I hate staring down Sunday gaps that don't get filled quickly. This one got filled pretty quick. This one took all week and drove me insane, even though it was the easiest potential, read just to keep trying to fill the gap. It just took forever. Monday at least filled it pretty quick. So it looks like this one's going to get filled before we even get off the air here and go to the big game. But yeah, setting up for a wild week already. I mean, and when you look at this in the grand scheme of the last 3 weeks of volume, we basically rejected off that value area low. So as I said, do you get that full rotation of value? Kind of already did in the gap down and now moving back into all of this volume. So until something changes, you kind of got to just be aware of this 6110s to almost the 6000s on ES as an area that could be bought and could be sold. So that's the gist. Let's get to some questions, shall we? Let's see. It is 5:15. Big game in 15 minutes. We'll get to a few questions, and then I will send all of y'all on your way to Super Bowl parties to go check on that brisket that might be done or could be done in 6 hours if you didn't start it overnight. All right, let's see. How do you find the point of control indicator on the Topstep X platform? So it's not an indicator. This is the visible range volume profile. Sorry, this is the fixed range volume profile. And all you got to do is jump into the style section and select it. So you can take it off, take it on. I keep them on just so you guys can visually see where the most volume is if you can't see it based on the histogram. But at least it tells you, what that area is. So there's not something that's just going to spit out the point of control. In fact, I don't even know if the Topstep levels has point of control. Oh, it does. So you can also do this if you don't want to put a volume profile on your charts. You can have the previous day's point of control on the Topstep daily levels too. So there is another way to do it if you don't want to have it based on a specific section of volume. So I misspoke. But this will only give you the previous sessions. If you're looking at it from a longer time frame, you need to add it to your visible range or to the fixed range. Oh, that's Andrews. 150 point gap down incoming on NQ. Just a wild guess. Well, he was the closest to the pin, so we're gonna give him a treat for that one. All right. Curious, have you changed any way you trade with Trump headlines that move the market either way? I have not changed the way I trade. I have been more strategic about locking up if green. So I have locked up a $300. I have locked up $125 the last couple weeks. So for me, if I take a good green trade, even if it's something small and it's $500, which for me, I guess is a smaller winning day. I'll sit there for a few minutes. I'll let another period kind of pass, maybe get to the euro close. If I don't see anything that gives me, the confidence and feeling good about an entry, I've been hitting the lockout button. Even on Thursday on fast markets, I think I was up about $125. I didn't take another trade for about 3 hours. It just depends. If I've been up over 1,000 and we're past euro close, I've been hitting the lockout button every single time. So that's how I've been changing it. I'm just not giving money back to the chaos that is the Trump market. So if you hit a good trade, that's something I've been advising my VIP team to do. If you're green, depending on the way you trade, your typical sized winning day, what a good trade looks like for you, I've just been advising people to get out. You can come back tomorrow. There's going to be, when things are moving like this, when it's volatile like this, there's so much opportunity. So there's no need to sit here all day and overtrade. And there's so many ways that you can kind of control that, whether you're using some of the risk management features inside of Topstep X or you're trading on another platform, it doesn't matter. You can do it yourself at the end of the day. It's just, see profit, take profit, and then get out. Go do something better. Go something better with your day. Go outside. Go touch grass. If you follow me on Twitter, go to a therapy session instead of doing more TA on your charts. The logic is, with how volatile it is, there's another trade. There's always going to be another trade. You're going to find one if you're sitting here. And with things moving like this, you're going to give back money just because statistics are just not always going to be on your side. And if you were trying to take a scalp off the first dip on Friday and then the Trump headline hit, you had a very bad day, even if you were using stops because of the slippage that was there during that tweet release about the tariffs coming this week. So that's why I'm saying, there's no need for, at times like this, if you're green and you've had a decent day, to take another at bat. You're just putting more money at risk. By the way, do you look at previous days open interest? I don't. It's not something that I use to kind of guide, my trades in theory. Hoag's a big proponent of that. He might be a better person to even ask on how to articulate the differences and what to look for based on that information. I know he likes to look at a lot of the time if we're introducing, more shorter time frame buyers or sellers versus longer time frame buyers or sellers. So he's a better person to ask on the best way to even interpret the day's open interest and things like that. It's just not something that I look at personally. It's just not based on how I trade. You guys have seen me. Sometimes I'm in and out of a trade in 2 minutes. So I don't use it to guide a lot of my my bias. And for me personally, I don't need an extra thing that may tweak that bias a little more. So I don't look at it. How do you determine your weekly pivot? Why is it drawn as a zone instead of a line? So a lot of my weekly pivots are based on a couple of things. One of them might be a option strike based on SPX and the ES. And the reason it's roughly 5 is because I have found as we drift closer towards rollover, not next week, but as you drift closer to rollover, the spread shrinks. And every week it could shrink anywhere between 5 and 3 points. So it just tends to drift. So I tend, when I lean into options as another piece of my pivot, I just keep it a little wider just because that spread will shrink. So you don't want to think, oh, okay, that means I can, if we base above 24, I can just long it. It as the week progresses, that may be 21. So it just kind of gives me that extra little few ticks in theory. When I'm setting a stop, let's say if I was going to be trading off a weekly pivot, but this is based on last week's value area low, also coinciding with what is roughly 6,000 SPX. So that is kind of the logic for this week's pivot. But the reason I keep it a little wider is just to give yourself the thing with levels. You still may wick above them, below them. If you're trading off of a straight line, you might have a bad time, especially if you're doing it on something like NQ. It really does need to be more of a range. So on ES, it could be 4 points, it could be 2 points, it could be 3, 5 at times is a lot of the time how I draw my pivots, because I also don't want to be trading off of it. I want the confluence of this area and then the confidence to say, okay, if we really do break through it or we hold and we pierce back above it, you can feel pretty confident kind of going with that direction. If it's a straight line, it doesn't tell you kind of that full picture. Nick, on Friday, you were calling out looking at Delta. Where do you get Delta on TopstepX? Thanks. It is not available yet. So I use other data through MotiveWave and Rhythmic, soon to be Sierra chart, that is basically telling me the delta on like 1500 volume candles in ES, and it'll repaint them at different colors based on, what is the higher delta, positive or negative, or is it an extreme? Is it significantly positive versus significantly negative versus in that volume bucket, basically. So I have another data source that I'm looking at. I also use delta by price to kind of guide that my decision making a little bit there, but I know Jay looks at delta too. Currently, there's not an indicator in TopstepX, but it's something Hogue and myself continue to ask for. So it's gonna come. I have confidence that it will, because we keep asking for it, and the more you guys request it, I believe there is a feature request that you guys can thumb up for it. I know it's being talked about. Hopefully it gets there soon, because it would just make my life easier to have one less screen that I have to watch. But yes, on something like the reversal challenge, when we're in that tight of a range, sometimes you're looking for any sort of edge to beat Coach J. So I was looking at Delta, as was he, towards the latter half of that shenanigans of a session that we call Friday Power Hour. And it just I wouldn't say it gives me an edge, because there is no edge in the reversal challenge. It is just pure stupidity at times. But if I see those candles change colors and I'm watching the difference in the positive and negative delta on those candles, and I'm just clicking reverse, that's one of the few times where there is that little bit of an edge that you can use delta for there to try to quickly get in and out of, positions based on just positive or negative delta. It's worked the last like 2 weeks. It hasn't worked before. Sometimes it can change and run you over so fast, which is why you don't look at it in that short of a time frame. But for a sim challenge that we're screwing around with, I mean, you need any edge you can get, I guess. But you really don't want to base it in that short of a time frame to make a trading decision. It's just, since I cannot hit flatten, it just is like, gives me a reason to hit reverse instead. Can you go over gamma levels? I wish I could this week. My data is like broken. When I was pulling the report today, the data made no sense. So I can't show it to you guys. I don't want to show it to you guys because it's showing strikes that have no relevance. It honestly looked like it ported the 0 DTs, because it looked very similar to what Friday's close for the 0-day chain looked like. So I think there was just some weird API call or something to the data. So I'm imagining it'll get fixed by the time we open, but I couldn't pull the data correctly. Nick, everyone I know ends up at Sierra. I am an avid MotiveWave user. What was your deciding factor to switch? For my personal account, guys, I mean, it just goes down to like, I like learning these trading platforms. One of the reasons I switched to TopstepX for my live account for MotiveWave was because I wanted to get more comfortable, trading on this. For my personal accounts and some of the other things I do, it just was time. I've been using MotiveWave for a few years, and it made sense for me to just want to try something new. It's also just super customizable, and I have some good trading friends around me that have offered their time to continue to help me learn it and help me get it set up. And we're not there yet. It's more just me dedicating the time to it, but there's nothing wrong with, I had no reason to leave it. It's just, there's a few things I've been trying to play around with a little more with like combining studies and doing a few other things that are just, there's ways you can do it on Sierra that made me confident. So I'm just playing around with it for my personal account for futures. I still haven't executed a trade on it. So we'll see, but Motivwave is great. I still love it, as well as Ninja and all the others. If you're not using TopstepX, I'd recommend you try it because it's super simple and easy to set up. You don't have to worry about learning a lot of these things. If you're comfortable with TradingView, you'd be comfortable with TopstepX. But I think there is value in kind of learning all of them, to be honest, which is why I'm kind of continuing to try to learn more of them. Because if you're an expert in a few, you really can, evolve your knowledge base going forward. So I'm just that kind of person that likes to learn new things. So anyway, that is the final question. And I want to get you guys out of here before the big game. So we'll recap real quick. Weekly pivot down here towards SPX 6,000, roughly the 60.25s to 60, let's call it 60.20s, just for simple math. We did gap down. It looks like we're going to fill it. I'd be looking for us to continue to kind of balance in this range of about 6,100 down towards 6,000s until we get more tariff tweets or something changes currently. So we didn't gap down and go like we had the last few weeks. So I'd take that seriously, especially because we bounced off my pivot, which is last week's value area low. If we rotate back up towards these highs or just kind of trade in the middle of this range going into the New York session, it would not shock me. But I expect this gap on NQNES to be filled. So anyway, that's the show. Let's go have fun. Let's go eat some queso. Let's go cheer on Saquon on his birthday to go win his first Super Bowl. Let's got to go Birds in the chat just because I don't want to see the Taylor Swift show once again. I don't want to see the Chiefs three-peat. I really don't. But you guys go enjoy the game. Everyone have a wonderful rest of your Sunday. I'm sure your wives and girlfriends, everything else is just waiting for the halftime show and is humoring you by letting you have the game on the whole time. But yeah, thanks guys. Thanks for tuning in. Thanks for being here. It was a good show. Everyone go enjoy the game and we will be back tomorrow for fast markets. Actually, I think Dakota's doing slow markets tonight. So tune in for him. And then I will see you guys on TopstepTV Tuesday morning for fast markets with Coach DBA himself. Thanks for being here. Everybody trade safe, trade smart. Don't be staring at charts. Go have fun with the game. And I will see you guys later this week.